In this panel, we want to explore what is the role of financial services in delivering this, how can policymakers support this process, both in terms of regulatory framework and adoption, what implications for financial stability may indeed arise, and how do we balance these with the need for financial services to be innovative and internationally competitive. The application of emerging technologies will both create and reinforce ethical and social challenges, which may stunt deployment across financial services. How do we get this balance right? We've also got a situation where traditional industry and business models are becoming increasingly blurred. So we have a situation where access to emerging technology is largely controlled by an arrangement of non-financial services providers, and these interdependencies create opportunities themselves also for some traditional, although not all, financial services firms. And I think the last issue is, are innovative firms able to find ways of resolving these challenges through new business models and collaborations, and indeed has COVID changed any of this? So I've got a extremely knowledgeable panel to discuss these issues. I'll go through briefly, and then I will hand over to Petris just to kick off from the Commission with a sort of an overview. So the speakers I have on the panel, Petris Zirganis, who's Head of Unit of Digital Innovation and Blockchain for DG Connect in the European Commission, Eva Kiley, who's MEP, Andrei Karovic, MEP, Christian Catalini, who's Chief Economist at the Diem Association, Philip Sandler, who's the head of the Frankfurt School Blockchain Center, the Frankfurt School of Finance and Management, and lastly, Patrick Armstrong, who's a member of the Financial Stability Board Secretariat in Basel. So Petris, could I just hand over to you just to give a sort of a brief overview? You'd have just heard Roberto, or probably caught the end of him, just in terms of the Commission's agenda in this place.
Thank you very much for giving me the floor. We have a holistic agenda and approach to fintech and the emerging technologies like blockchain. This is with the FinTech Task Force. We have a co-chair, myself, from the digital single market side, and another co-chair, Jan Seysens, coming from the financial market side. You have heard our hearing about the initiatives in the digital finance strategy, where we collaborated the markets and crypto assets, very necessary for us as well on the digital market side to enable the decentralized digital ecosystems for use cases like data, supply chain, other sectoral use cases outside of the financial sector, but obviously also very important for the financial sector, its modernization, its competitiveness. Also pilot the regulatory sandbox plus for distributed ledger technologies and market infrastructures. This is complementary to our initiatives with the European Blockchain Partnership, 29 European countries, all 27 EU member states, Norway and Liechtenstein, building a European blockchain services infrastructure, working to implement, already starting this year, use cases such as self-sovereign identity, audit document certification, reg tech, and coming up a little later, SME bonds on the blockchain. So very complementary or working directly with the financial ecosystem. Then you have seen that recently the ECB, the European Central Bank, and the European Commission announced technical, legal, and policy collaboration to evaluate the ways and the question of whether to introduce a digital euro. This also involves the digital single market, the Connect colleagues, as well as the financial markets and macroeconomic ECFIN colleagues. So we're very much working on that from the sides that are more classical monetary policy, financial stability, and financial markets to the areas like a programmable euro, where DG Connect and my team are leading along with the European Central Bank, but of course, working with our colleagues. On the legislative side, you heard the Digital Services Act It had also a part in the public consultation on smart contracts. This is now being moved to the Data Act because it's seen as a more appropriate place there, because the decentralized digital ecosystems can be an alternative and an ecosystem to allow citizens to manage their own data, utilizing the tokenization that is made possible and legally clearer under the markets in crypto assets. We also actively work in standardization at ISO Technical Committee 307. Roberto Viola mentioned the International Association of Trusted Blockchain Applications, which has a governmental advisory board, a global board. Right now, the co-chairs are from Canada and the European Commission. We'll also have many other countries, including the US Federal Reserve, participating there. So this is very interesting. We're also investing in skills. We have an artificial intelligence blockchain fund, which was leveraged to 700 million last year to scale up our startups to a larger global competitor level. And I mean, I think this is an idea of what we're doing, and I'm happy to join again in the discussion after the highly esteemed colleagues speaking with me have had the chance to take the floor.
So you're not really busy at all, I gather from that list. Can I turn to maybe you, Ava, first? Just I'm particularly interested in how we get this balance around the ethical side of some of these applications of technologies and the social challenges that may impinge on the development of financial services, and then also, you know, an issue which certainly Patrick will be more, you know, is much more focused on, is this balance, innovation, financial stability.
Okay, so you started with a difficult question, ethics and finance. Well, I think the concept of blockchain in its core of its technology is actually to decentralize because of the issues and the market failures we had with centralization during the crisis. This is what actually, I would say, helped the release of the paper of 2008 for Bitcoin to become so popular. And this is when we started to be a bit more involved, because we understood that we had to provide solutions. And if we didn't, then innovators would, and innovation is unstoppable. Maybe takes time. Now it's more mature as a technology, but I believe that now is the time to realize how we can use these technologies to improve the failures that we cannot ignore anymore. And let me say, because I started with that, I want to thank also you, Daniel, and Nicholas, for organizing this amazing event under these extraordinary circumstances. And since I'm talking after Peter, I always have less to say about what's happening, but I can definitely tell you that I'm quite active on the DLT pilot regime. I'm one of the shadow rapporteurs, and I'm expecting the Data Act to come to ITRE committee. So if it's true that DeFi and tokenization will come there, I would be happy to work on that too. It's going to be after summer, because actually it's not covered by the MiCA regulation. So in the ethics of it, I would just add one thing. In Europe, we have still around 20% of Europeans unbankable. So this means we definitely have to find more solutions for them. We have to include them in the financial system, and we have to make it easier. And since we are moving towards a digital single market, not yet, we still have some barriers, although the pandemic was a catalyst for that. It accelerated everything. I haven't been to a bank for like a year now. So I managed to overcome problems that I had to solve with my physical presence online, which means we have the technology to achieve that. I believe now we have to remove all this, to solve these problems, to remove the frictions, reduce the cost for customers and citizens, and to have trusted transactions cross-border. This would mean, of course, that we would also address the hidden fees. We talk about billions inside the European market of the banking system that actually I haven't seen a response, since I'm asking like every 6 months. I table a question asking why these hidden fees are sometimes higher than the real transaction. So you have to set like €5, you pay 6 to do the transaction. I believe that we have to be more open into innovation, and we have to understand that there are citizens that need to have services that they feel they can trust and they are available to them. So since we started working on open banking 6-7 years ago, I believe now we're moving into open finance, and I think this will allow more competition to happen. And as Peter is also mentioned, we have amazing exponential technologies like AI helping us with smart contracts to reduce even more frictions there. So the convergence of these technologies is where I see a great revolution, I would say, taking place. And big is no longer better, as I would say you can be safer with smaller but smarter fintech solutions. And I think this is our role. So the European Parliament, me and my colleagues, and with Andre, we are on the same page. We want to offer options to citizens. We don't want to change everything. We just want to offer them the options that exist so that they will be able to choose. I think this would be my first intervention here. Thank you, Daniel.
Thank you. Yeah, I think you raise an interesting issue around trust, actually, in the financial service, which clearly suffered following the crisis around banking.
I'm coming from Greece. I have to underline that. Yeah. And in Cyprus, people lost their savings in one day, in one weekend. So there is nothing more ethical that I can discuss about than not allowing this to ever happen again.
Yeah. Andre, may I turn over to you, please, for your comments on this? And one other thing, just if you caught the tail end of Roberto, this issue he mentioned around principles approach, leaving the sort of the enough there for industry to apply principles themselves.
Thank you for the invitation. It's a real pleasure and honor to be part of this panel, and thank you for the possibility to address those issues. Yeah, I mean, I think you we are sort of circling around some of the key principal questions that we need to address. When we had discussions in the Parliament about the digital finances and digital financial services, and we were trying to sort of consolidate our position and approach, and also vis-a-vis the proposals coming from the Commission, I think the key for us would be, to reconcile or put together a couple of perspectives that at one point can actually be a little bit difficult to do, but I think it's feasible. It's really just about having all those considerations on the table. I'm really glad hearing from Peteris about all the initiatives that the commission is actually running, and I think it will only contribute to the innovation potential that we have in Europe. But I think we still have a lot of potential problems and obstacles we need to deal with in order to tap into this potential fully. So it's not really only about embracing the technology, but it's really also to see maybe more in political terms and regulatory terms how this technology can actually be helpful to us as well. It's not only to the private entities, to business actors, to innovators, to show the way. But I think it's also our task, let's say, on the public or regulator side or supervisor side, to see if we can actually, facilitate the technology uptake and sort of cope with the same rhythm of the innovation in the business sector. I think you mentioned that at the beginning, Daniel, this potential dichotomy between innovation and financial stability. I think it's really about perspective. Maybe it can be opposite aspects, but maybe it can be within the framework of looking into the financial stability issues, keeping into safeguards and principles, how we can actually enhance innovation in this framework. And that's where I see, I think, one of the key questions. You asked about the principles. I think To give you an example, we currently are dealing in the European Parliament with a number of legislative proposals which are actually part of the Commission Digital Financial Services package. And some of them are stepping into uncharted territory, such as market in crypto assets. We don't have until now a comprehensive EU regulatory framework in this regard. But I think what we need to, or at least it would be my goal as one of the shadow rapporteurs, it's actually to approach it as a real framework, as a principle-based type of legislation, which can remain technologically neutral, which can stay with us for quite a important period of time, so that we don't have to change it every time a new type of innovation emerges. That we can use it as a real, let's say, grounds for further innovations. It was clear from my discussions with colleagues in the Parliament, we really need to make sure that the principal safeguards are respected. On horizontal level, issues such as data privacy, in more, let's say, related or consumer protection, on more, let's say, financial sector aspect, issues like investors protection. So, we need these to be embedded in the legislative framework as principles. But on the other hand, we need to leave enough room open also for innovators and for new initiatives coming in, so that we assure sort of a predictability of the legislative framework and its usefulness. And I think last but not least, a comment that may be added up into it. It's also the digitalization, not only in financial services, but I think especially in financial services, can actually help us to overcome a lot of national obstacles and barriers that we still see. It's an additional dimension, if you wish so, and which can actually help us to really create the environment of 27 member states to really see the strength and use the strength of the single market. And this is not only when we look inside of the European Union, but also on international and global level, because financial services are maybe more globalized than some other sectors could be. So I think this is also an aspect that should be mentioned in this regard.
Thank you. I agree with what you've said, and just that one point on predictability. One observation I would make about the US is they managed to pass most of the Dodd-Frank Act pretty quickly, and it gave that stability for the financial sector, which we've not been able to do to the same extent in Europe. Christian, can I turn to you now? I mean, you've got the pleasure of being the only private sector participant on the panel, and actually, I think there's a couple of issues that I mentioned at the beginning, particularly around this kind of way of collaboration, new business models of working. It's not new. But if I go back to, let's say, MiFID I, and one of the big innovations that came through there, the launch of Turquoise, that was a consortium effort, and it led to quite a big change in the exchange, or certainly on the equity side. I'd appreciate sort of what's happening on the sort of the collaboration business model side, and also this sort of any differences between EU and US on the uptake of technology.
Thank you. And in fact, the opening remarks so far are a great segue to some of the points that I wanted to raise. I think this is an area that would greatly benefit from a deeper, more engaged public-private partnership. And in a sense, we really owe it to consumers, small and medium merchants and businesses to innovate in financial services, starting with payments and related applications. The costs are still too high. And this is not just through cross-border, it really puts a heavy burden, I think, even on economic recovery. If you think about, how much of each transaction is taken by existing payment rails when people try to pay for services, whether digitally or in person. Our project, welcomes proposals such as the EU-wide regulation on markets on crypto assets, in particular because I think it emphasizes some really important pillars for responsible innovation in this space, whether it comes to encouraging innovation, facilitating more competition, while at the same time, really protecting consumers and ensuring financial stability. I think at the same time, what we've noticed is that, at least in Europe, there's somewhat of an attempt of fitting new technology and new opportunities really into existing frameworks. If you take the example of e-money tokens, is it the best approach? Well, we do believe, of course, that you need to really guarantee the same protections, the same guarantees to consumers from a functional perspective. It's not clear that taking something that's been working under very, very old technology and applying it to a new space is the best approach to encourage more competition. Take the example of arts, so asset reference tokens. There's a number of aspects in that proposal that we don't think would be workable and may set the European Union back in time relative to what's happening in other parts of the globe, including the United States. Taking really a briefly step back, I think this is something that it's often misunderstood, and often the reason I think it's because different projects have different views on this. Our projects thinks of stable coins as kind of an intermediate step. It's not the end goal of a technical project like Diem. For others, the stablecoin is the end goal, and to some extent, there is an aspect of alternative rails that are self-contained. But the way we're thinking about this is really going back to the public-private partnership. Think of stablecoin as almost retrofitting new technology on an old system, connecting the slower fiat rails to the potential of more programmable ones, until we do have things like digital euro. I mean, that's definitely what we all hope for, because it is the public sector mission, I think, to deliver on those type of rails that are open, interoperable, and accessible to a number of different participants. So we think of stablecoins really as a temporary complement and as a novel on and off ramp between kind of the new space that is moving really quickly and the old one. I think this has already been mentioned also in the previous remarks, but what blockchain really brings into the picture is a change in the economics of digital platforms. We wrote a paper some years ago that came out as an MBI working paper and then was published by the ACM on really trying to unpack what are the key economic forces that drive change in blockchain. And one is really the ability to design digital platforms where no single player has control over the ecosystem. So there's no platform architect that can act as a gatekeeper to participants. This relates to a really important concept that it's really at the heart of DM, which is interoperability. You want users from different digital wallets. Imagine the classic example of kind of a small wallet with a small install user base to be able to interoperate with the users from a larger wallet. That starts to kind of put some counterbalance to network effects and really opens the way for new models of competition, new approaches to privacy, and different ways to price for business models and services. We think of that as one of the key drivers in financial and payments innovation. Now, that said, there's a number of risks in this area. And in fact, if you look at the recent documents by the Presidential Working Group in the United States, I would say there's three pillars of concern. The first one, of course, is financial crime. And there's the issue of direct access to some of these networks. We made some very conservative choices in the design of DM. The only participants will be regulated VASP, so virtual asset service providers. We believe that eventually in the future, some form of access that is more inclusive may be particularly important for unbanked and underbanked, although we realize that without strong identity standards, and this is where initiatives on identity like the European one, I think we would be complete game changers in who can access and who can participate safely on these networks. The other pillar of governance, one of the reasons why we created kind of a hybrid between some of the good economic properties of permissionless networks and some of the guarantees of permission ones, was that we realized that regulators were extremely concerned about removing safeguards in the future if control is kind of in the hands of a fairly anonymous set of participants. And last, on consumer protection, this is a topic that it's really dear to kind of my agenda in this space. We think we can actually create better standards, starting from things like the reserve and how we operate, the coin and the backing, but more broadly also what we bring into the ecosystem. One of the rules that we've introduced is, for example, the one-to-one backing at the VASP level, to ensure that there's no fractionalization, not only at the DM reserve level, but also at the operator level. You wouldn't want a wallet bringing leverage into the system in a way that you're not able to observe and control. So really to summarize, we think that if it's the same business, the same risk, it should be the same regulation. And so we think it's important to really introduce rules that allow for experimentation while protecting these key dimensions and concerns around financial crime, governance, and consumer protection. Our project has evolved quite a bit from the original white paper, and in fact has matured on a number of dimensions. But that exercise was extremely helpful. We had a multi-year journey on thinking through what do we import from the best practices of the financial sector. Think about Basel III as applied to the operations of our reserve. How do we think about issues around capital substitution and financial stability? How do we ensure liquidity in the system? And that has made the project substantially better. At the same time, what's happening, I think in areas less regulated around stablecoins, is that you're seeing experiments. And of course, there's very exciting technology in DeFi or decentralized finance, but there are also a number of risks. There are products that, if you were to look at them, they look like banks or other financial instruments, and they're essentially fairly accessible even to consumers without a lot of protections. We think those kind of experiments without thoughtful regulation around them could actually bring risk to financial stability and to consumers that may not always understand that what they think is, let's say, a digital dollar or a digital euro really is something based on expectations, or it's something that is extremely leveraged in terms of the underlying assets. So I close by saying that, again, we think stable coins can be an helpful path towards CBDCs, and they can allow for more experimentation. That said, we don't think there's a dominant design in this space at this stage. And in fact, it'll be important for the public sector to encourage multiple networks, multiple experiments to really flourish and compete with each other. Because I think through that competition, eventually the winners will be consumers and businesses. Thank you.
Thank you, Christian. Philippe, can I turn to you? I think the areas I think will be useful, again, how do we get the adoption working? And any thoughts you have about particularly both the public and the private sector to get better decision making?
Yeah, that's a very, very good question. So first of all, my name is Philippe. I'm coming from the Frankfurt School of Finance and Management. It's a university which might not be known by everyone. It's a small university in Germany, but in Germany it's a good but small university. We are focusing on education in management, finance, and computer science, and with this also the blockchain topic, of course, since quite some years. And directly turning to your question, Daniel, I feel that we have to consider the following. There is some diffusion happening. There is some adoption happening, yes, but we have to dig quite intensively what field we are talking about. Let's go through a couple of fields. To some degree, enterprise DLT, that's all the permission networks, have strong promises, but to be honest, not much has happened so far. I estimated together with a friend that last year, 2020, in the German financial sector, we would estimate that in total, maybe 30 or 40, maybe 50 million have been invested in blockchain technologies, like consulting, software licenses, HR, and so on. 30, 40, 50 million. That's basically close to zero in case you look at the IT budget of larger banks. It's close to zero, right? In case you look to Siemens, Daimler, and the industrial corporations in Germany, there's basically close to zero adoption because there is no funds, no budgets, and nothing. So we need to be honest here. Enterprise DLT so far produced a couple of good consortium networks, and there have been some nice developments. But after observing this space now for 3, 4, 5 years, there did not happen much, especially not if you compare it to other domains. Let's compare it to the public networks. That's primarily Bitcoin, Ethereum, Cardano, Stellar, and other networks. These have really flourished. Bitcoin now has reached a market cap of $650 billion US, right? That's $650 billion US versus 30, 40, 50 million of IT budget for blockchain stuff in Germany financial sector last year. That's the facts, that's the truth. In case we talk about the digital euro, We have capitalized stable coins, the Tether project, USDC, and other ones, where day by day 100 billion US dollars are turned over and moved from A to B. The US dollar stable coins are capitalized with 20 to 25 billion US dollars. Let's look at the euro. There is no euro equivalent at all. So we clearly have to admit that enterprise DLT at this point of time has quite some promises, and I'm very, very much sure that these promises will be held. Probably the regulation which is underway will be a trigger point to stifle companies investigating more in blockchain, and companies like industrials and other ones investing more in blockchain technology. Maybe the regulation part is very, very important here to create a legal fundament for companies to act right. But we need to be honest here, at this point of time, the only sector where you can see strong growth is the crypto ecosystem with Bitcoin, Ethereum, Cardano, DeFi, and all this stuff. And Libra and Diem, you know, I love this project actually, you know, why? Because it really created a strong impulse for companies to investigate this topic, and also to central banks to really find out, does it make sense to talk about CBDCs? Does it make sense to potentially implement digital currencies, digital euro, digital US dollar, and so on? I think that that's the main impact which Libra has done, and I think that was good this way. But besides this, let's be very honest, Libra has done nothing else. You know, Libra has done a couple of working papers, but Libra has not created a stable coin similarly to the USDC, which other companies has been done last year. That's simply the truth, right? So there needs to be done a lot of work in case enterprises and also financial organizations in the public sector should adopt DLT. I think regulation is very, very, very important here, because it does create a legal fundament for companies then to act, to create a reason why they should invest, right? Nobody invests on a shaky fundament. And in case regulation is improved with the MiCA regime primarily, then I would expect that you see quite some impulses towards the private sector, who then starts to invest, right? So everything is underway, but we should be honest, the enterprise DLT has made a lot of promises so far, which have not been held so far, especially if you compare it to the really strongly growing crypto ecosystem. And last word from my side, we should not necessarily view Bitcoin and Ethereum as private money. I think that's the wrong framing. I think what's the right narrative for Bitcoin is that it's simply a digital commodity, which is humanity has basically discovered a digital commodity. In the past, we simply had chemical elements, you know, like gold, platinum, uran, plutonium, and all this stuff, which has been discovered by human mankind. And now, for whatever reason, we discovered a digital commodity. That's Bitcoin. It's not necessarily private money, and it's not necessarily a private data center network of companies around the world. In my personal opinion, it's simply a digital commodity, and it's simply there. And that's how we should look at it, because it's simply it's important to have the right perspective on Bitcoin, in my personal opinion, being a commodity, a digital commodity, right? And education is so important because once people understand blockchain, they typically, very often, they like this topic, and then they try to make it happen. And in case we see the enterprise world, why did it not work so far? I think it's lacking education in specific companies and decision-making committees where blockchain has not understood well enough, to be honest.
Just to come back on one of your points there, which is the investment by the financial sector over the last year, the work you quoted. I have worked at a number of banks, and one large German bank who reported results today, that they would set aside a lot of money for their IT budget every year, usually around this time. The problem that they've had for the last 10 or 12 years has been that budget is taken by regulatory projects. It's not an issue, you have to comply with the regulation. And therefore, that budget has just had to go somewhere else. Now, it's a very short-term strategy, but to be honest, when you have negative interest rates, which impacts not just banking, but particularly insurance, etc. This is one of the byproducts, and I don't think it's certainly not the intention of the people running these companies. I just think it comes back to what Andre was saying around the sort of the predictability of getting through all this, and otherwise it kind of crowds out the long-term strategic thinking for the future. I'll let Christian come back later on maybe some of your comments that you made, but could I just turn to Patrick, please? Patrick, but particularly interested, I think, on the financial stability aspect, which is clearly, central to the FSB role, and sort of a slightly more sort of global perspective around these issues.
Okay, thanks, Daniel, and thanks to Afore Consulting for inviting me to the panel. And let me just say that the remarks that I make today are my own. They're not necessarily the views of the Financial Stability Board. Maybe I could begin by just picking up on a reference that Ava made to innovation and the financial crisis. When I first began analyzing financial innovation over 10 years ago, the financial crisis of 2007, 2008 was still fresh in the minds of most people. Many of our political masters and fellow regulators viewed innovation with nothing short of disdain, a culprit, chief culprit in the crisis. Yet this view speaks less to the subject of innovation than it does to our changing attitudes towards it. Innovation has been with us throughout history. Most innovations fail, a few succeed. Those that do succeed are generally beneficial to the wider economy and the welfare of the consumer. Some, not many, are detrimental to our goals of maintaining financial stability and consumer protection. In turn, I like to think that we at the FSB bring to the topic of innovation a balanced view, supportive, but also vigilant of the risks that could be introduced. In terms of today's topic, new technologies and how they interrelate with financial services, and how some of these new entrants are using technology to enter the field of finance. Over the past 3 years, the FSB has spent time analyzing market structure, the interaction between incumbents, big techs, and fintechs. And that's part of our ongoing work to monitor market developments and potential financial stability implications. In general, our work reflects the belief that technological innovation holds great promise for the provision of financial services, with the potential to increase market access, the range of product offerings, and convenience while lowering costs to clients. It can also contribute to greater financial inclusion, particularly in emerging markets. Some key considerations from the FSB's analysis of the link between technological innovation and market structure are as follows. First, to date, the relationship between incumbent financial institutions and fintech firms appears to be largely complementary and cooperative in nature. Second, in terms of big techs and financial incumbents, there, unlike the fintechs, we see a greater degree of competition. Big tech firms typically have large established customer networks and enjoy name recognition and trust. In turn, big tech firms may grow quickly given their significant resources and widespread access to customer data, which they could be a self-reinforcing network effect. In certain markets, they are competing directly with incumbents. In others, they are meeting the needs of the unbanked or the underbanked. And in still others, they're partnering with incumbents, providing technological services with a client base. A third topic that's important to us is third-party servicing of financial institutions. And that includes the data provision, cloud services, analytics. And what we had seen previously, prior to the pandemic, is that much of that work, particularly the cloud, was not part of the core offering or use on the part of incumbents. But we think, anecdotal at this point, that may be changing as a result of more and more financial services moving digitally. So in short, in sum, the relationship between incumbents, big techs, and fintechs is a highly nuanced one. They learn from each other. Sometimes they partner, sometimes they get bought, sometimes they compete. And what drives these changes? Well, the FSB, we typically look at demand drivers and supply drivers, and quickly. The demand drivers, in part, it's the low level of financial inclusion across many of the emerging markets, but also unbanked, underbanked markets in the developed world. For instance, 22% of the US population is considered or underbanked. To the demand side, the need for more cost-effective means of remitting funds from one country to another, driving much of this change. Third, the growth of a younger tech-savvy population who expect to be able to conduct their financial services in the same way they undertake social media or e-commerce. And they're attracted to some of these financial services offered by big techs, for instance, because of the lower marginal cost. Supply side factors, the growth of mobile phones and the widespread use of the internet in general. Second, certain regulation can create a favorable environment for certain of these new market entrants to compete. And third, some governments have provided incentives and infrastructure, whether it be faster payment systems, digital identity technology, and open banking, including facilitators. Benefits, new entrants to financial services, whether they be fintechs or big techs, could materially alter the universe of financial service providers. Increased competition and a wider diversity of providers, whether they be in lending, payments, insurance, or trading, may create a more resilient financial system. However, we also are conscious of the risks that big techs in particular could bring to financial stability. Some of those risks are similar to financial firms, broadly stemming from leverage, maturity transformation, liquidity mismatches. But some are rather unique. The scale that big techs may bring to a given market, if they dominate it, could have stability implications. They could also be very disruptive to incumbents in terms of were they to take a large share of deposits from a given whatever set of incumbents, that could increase the funding cost of incumbents. The incumbents may in turn reach for yield, in turn reach for risk. So let me stop there. Thank you.
Thank you. Could I just give Christian, would you like, is there anything you'd like to comment on, just in terms of particularly Philippe's comments around the consortium you're working for?
Yes, thank you. I think as I was mentioning in my opening remarks, our project is different because we're working with regulators. We've been collecting feedback, and part of that process takes more time. There's a number of projects that are live, some which have market caps in the tens of billions of dollars that are not regulated and will not be regulated to the same extent. It is much harder when you have to go through the rigor of something like the FINMA payment system license application, which for those of you that are familiar with it is very similar to a full banking application with a few adaptations for a project like ours. So yes, I mean, it comes at a price of speed to market, but we do think that it comes with much better protections and eventually with a product that is much more in line with what we should put in the hands of consumers relative to some of the things happening in other ecosystems.
Thank you. I just there's one question that's come in, Petris, just for you. I mean, just about giving more details on the initiative with SME bonds using DLT. I'm not sure if you're able to read the question on your screen. Just asking for more. Are you imagining a more full decentralized market in the future?
Yes, I can say a few words about that. Where we are is that we have a process for adoption of the new use cases between the 29 countries. This was in the second group of use cases, not the ones that most likely will already this year in deployment, but the ones that are being developed for next year. And the idea was to give better access across the entire capital markets union, across the entire digital single market, to opportunities for SMEs to launch bonds, to have bonds available to investors. We are looking right now with the colleagues from the financial markets at what some of the barriers are, what the pain points are, what can be helped with the blockchain. Again, as with all the cases with the blockchain, we're not carried away by the hype. You put something on the blockchain, it solves it. It's not like that. So seeing how either the public sector blockchain, the EBSI can help it, or the public-private partnership, which is one of the points of the European Blockchain Partnerships Declaration, opening up the possibilities to public-private partnerships for some use cases. So we're in more than an exploratory mode, but we are in, how to say, the final planning mode of this use case.
Thank you. Can I? It's really a question of our panelists from the European Parliament. The predictability point. I want to come back to this, and particularly, Andre, what you're saying about how technology evolves rapidly. I think the first thing is, do you think that you have enough insights about what's needed? And secondly, how do we give that predictability to the industry? If I come back to what Philippe was saying about the investments going in Germany, it would appear it's not sufficient, probably compared to the United States and China, for example. How do we get that when technology is just going to move forward very, very rapidly?
Well, I think this is what one can call the $1 million question. But I think the key in there is it's really to try to create a framework that, as I said in my introductory remarks, which would be based on principles, but which would not be necessarily extremely prescriptive and sort of tailor-made, if you want to say, to particular initiatives that we currently see on the market or in the business sector. As you know, as I think all of you are aware, the European legislator is not the fastest one in the world. I mean, it takes a lot of time for us to go through all the consultations, the preparation of legislation, the adoption, and the time for implementation. And I think in certain areas, especially in digital finances, we are there now. After I think a lot of consultation, we are in more in a delivery phase, be it on regulatory framework part, but we also be it in various initiatives, as the Commission has just highlighted. So the key there is actually to have a good consultations with the industry, to see what are the critical aspects that the new legislative framework should cover, and then to make it actually sort of a future-proof, something that we don't have to adapt every time a new technology or new type of initiatives or new business model arise. But we know that it fits into the model, and we can count on it for next 5-10 years. Because I mean, if we want to adapt the legislation every time we see a new rollout of technology or new initiatives happening, that would be very, very difficult to do. Obviously, we can go through reviews of legislation, etc. We can go through various technical modification and adjustments on level 2, for example, where the competences allow for it. But I think the key, and it's also good for, as I said, for the predictability of the environment, is actually to have a set framework that is actually implementable and workable for a critical amount of time. And that's something where I think we're currently discussing some of the proposals, as I mentioned. I think now, it's time to do it. We need to get it right. We have a good opportunity to do it, but we really need to go through, I think, a lot of discussions with industry, with other stakeholders, and also including on national level, because many of the issues that we are dealing with are currently still, in the remit of national competences, be it supervisors on national level, but also be it legislators on national level. So I think these are the concerns we need to also take into consideration.
Thank you. Philippe, I just have a question for you about decision making, both public and private, about getting the right skills in. If I could be sort of, if I take with the public sector to start with, if I look at, say, the United States, there's a lot of transition from people from public to private and vice versa, and that comes with its own issues around conflicts, etc. But it does bring that skill set into regulators, into decision making, which can be beneficial. The gentleman who spoke this morning from the Monetary Authority of Singapore, for example, the Singaporeans have been very successful about this. We don't seem to have that in large parts of the EU. And secondly, within firms, you don't get necessarily the shifts from people from other areas, let's take technology, moving into financial services at the top end for decision making that probably is warranted. Would you share that observation?
I would perfectly agree. That's a very good summary of what's happening over here in Europe and what's happening elsewhere on the world, in Asia and in the US. I would also support your thesis that in Asia people are more tech savvy, and this tech savviness, of course, is then also sitting in the board of a financial organization, right? In case I have a look at German banks, that might be a little bit extreme. But you typically see business guys up there in the hierarchies, people who are capable of analyzing risks. You know, that's a very, very important capability, and lawyers, right? But you not very often see like tech people who are basically digital natives and understand tech since 20 or 30 years, right? You do not see these people. And I think that's also rooted in basically the rules of the government. Because in Germany, the BaFin, the Germany's Financial Market Authority, doesn't necessarily require IT knowledge to be in the board, right? And I think what could be very interesting is to come from this angle and basically demand boards of companies to somehow get IT knowledge in there, that one person needs to have this to a sufficient high degree, because then this kind of digital transformation would happen top down, but triggered by the lawmaker, right? I'm not a lawmaker, right? I don't know if this is possible or not, but from what I understand how rules are being made and what impact it can have, this could be, in my mind, an interesting trigger point to basically force the boards to somehow get digital knowledge in there. And digital knowledge, we know it, you know, the digital native person, that's typically a person which is 40 or maybe 45 years old and below. Of course, there are people with the age of 50 or 55 who somehow still are digital native, you know, that's pretty clear. But from a probability perspective, the likelihood is higher if people are younger, because they learned it when they have been young. People at our university, you know, they are 18 years old, 19 years old. They don't have a physical wallet anymore. They just have their cell phone and they pay with Apple Pay. So that's just different than people who are being 60 years old, because people have been educated differently. And people in this age, they sometimes still like stocks, of course, but they prefer cryptocurrencies, you know. So there is a larger societal change in place. And I think the establishment of companies and probably also public authorities would benefit to give basically a little bit of access to decision-making positions to people who do have digital native profiles, and basically to embed this knowledge in the decision-making. And I also would expect that the regulator or the government or the European Commission could basically push this a little bit by asking boards to have dedicated IT knowledge in the top level management. Maybe that's possible.
Thank you. Patrick, there's a question come in addressed to you, whether you could give any examples of detrimental financial innovations to stability and or to consumers. I wonder if you'd like to respond to that.
Well, the financial crisis of 2007, 2008, where we saw CDO squared and you know, synthetic CDOs, which far outnumbered the physical CDOs with the underlying subprime mortgages. I mean, those were not necessarily good innovations. We did not benefit as a whole from a societal standpoint. Innovations, but again, I mean, I think one is challenged in general to find, you know, such perverse examples. In general, innovations have been beneficial to economic growth. I wouldn't take the Paul Volcker view of innovation, beneficial innovation, stop at the ATM. I don't agree with that view. I think we've seen plenty.
Okay, thank you. Could I also just ask on I think two very quick things, Patrick. One on the international cooperation. I mean, Petris touched on this, and a lot of initiatives that are going on. Has COVID driven even more cooperation globally amongst the public sector? And is there anything you're seeing around COVID and innovation that you'd like to comment on, or maybe it's too early?
Well, at the FSB, certainly our agenda in 2020 and shifted dramatically to respond to the COVID crisis, to bring about international regulatory and supervisory cooperation on the part of central banks, treasuries, standard setting bodies. So we spent much of the year doing that. And, other projects had to be subordinated. And we continue to work heavily on the issue of COVID and the issue of how we begin to relieve some of the measures that were put in place. In terms of what we're seeing from the effect of COVID on the sector that we just talked about, big tech, incumbents, fintechs, I'd suggest for the fintech, I'd suggest you steer people to the study that came out in December on the part of the Cambridge Center of Alternative Finance, the World Bank, and the World Economic Forum, in which they studied fintechs. And basically, between 2019 and 2020, fintechs witnessed extremely strong growth, with 12 out of 13 vertical sectors growing across the fintech world. In terms of big techs, I think we know the strong growth that they've witnessed as a result of e-commerce, but then also payments as well. Non-physical card payments, they saw tremendous growth. And then incumbents, I think based on industry conversations that we've had with incumbents, to the degree to which they've been able to adapt to a digital environment quickly, swiftly, then they have benefited. They've advanced light years from where they would have been had this not occurred. So it's happened across the financial sector.
Mm-hmm. Thank you. We've got 5 minutes left, so I wonder if I could just give this opportunity just for people to sort of any last sort of thoughts on the topic, or to react to any of the comments that have been made. Maybe I could go in the same order that we started with, and start with Petris from DG Connect, and then the two MEPs.
Well, thank you very much for giving me the floor again. I'll be brief. I think we have to have ambition to serve the citizen, to serve our businesses. In an economy, innovation is fed by finance, and finance becomes more efficient with innovation. So utilizing the opportunities of tokenization, smart contracts, blockchains, the convergence with other emerging technologies under AI and IoT can be a success story for European innovation, for global financial innovation. And we have to make sure we have legal clarity, the legal frameworks, but also the inputs into innovation in Europe, and to collaborate closely with our global partners like Japan, Canada, the United States, and others to ensure that this global ecosystem for technologies that are seamless by design is also as seamless as it can be, and at the same time, of course, protecting investors and working against money laundering, for instance.
Eva, do you have any reactions at all?
Yes, just some general comments, because I think you covered most of the topics you wanted to raise. So let me say that we will be working, it's going to be a very active year on legislation to achieve what Petris mentioned, legal clarity. And as Andre also said, we're trying to have this pilot regime that probably is not going to be temporary, but it's going to be permanent, but we're just going to test it. It's going to be like a sandbox. I know they don't like this word, but actually this is what's going to be. It's going to be a sandbox, and if it's successful, it's going to be expanded. And hopefully we will have also DeFi addressed applications this year. The most important thing for me is to also understand that we are working in parallel for different, to cover different aspects that we need to fulfill the puzzle of digital finance legislation. So it's identity, identification, KYC, AML, data protection and safety, and of course open data. So I think it's going to be a huge step forward once we conclude, and we expect also to have more clarity on how we can treat non-personal data, because we have GDPR for personal, but still we need to enhance it and advance to the rest of our data. And let's not forget that we already see credit cards that they are not just for transactions, but they're connected with our biometrics. They're used as identities. So we have to understand also the significance and the importance of data of our transactions, how much data are needed to be shared with companies, and these amazing technologies that can merge can open up to different vulnerabilities. So I think we need definitely safeguards. So we need to have a principle-based approach, and we need to have a clear understanding on how we can treat data to create a trustworthy environment also in cross-border payments, because it's not only Japan and Canada, but we have to talk with US, and they have huge vulnerabilities in their systems, and China, they are exploring also different ways of controlling the currency. I think Libra and China, they have accelerated a lot the need to have clarity in legislation in Europe, and that's why ECB is moving towards a digital euro. So we cannot avoid entering the CBDC, and we cannot avoid addressing all the issues that will occur. So hopefully in the end, what we're going to achieve is to be technology neutral, business model neutral, to give more options to citizens, not to favor the old models, not to try to protect the intermediaries that we don't need anymore. So to take down the cost and use these technologies to benefit our financial system. I think this is in general what we try to do, and let's make sure that you will manage, since you're having like these big debates, you will manage to contribute so we get it right and we don't need to change often, because we see that when GDPR was in place, then everybody was concerned, like, yes, but if you put it on blockchain, nothing can be deleted. So we have to update. So we have to be flexible, but let's try to be smart, create new boxes, and listen to the market and the investors, but make sure we will protect them and the customers too. Thank you.
Thank you. Andre.
Thank you. I would not repeat. I think a lot of things has been said already, and I would definitely subscribe to them. Maybe just two simple messages in the end. I think from what I see, and the COVID pandemic experience, I think pretty much confirmed that. It's that we have to really invest our efforts and obviously the funds that we have available to the development and to enhance the innovation in financial services when it comes to digitalization, and really have in mind as one of the core concern the possibility of cross-border activity. So sort of a consolidation of the single market in financial services, where I think we still lack a lot up to this point, but we have a great potential in the European Union, and especially with digital services, we have also now the tool in our hand. And the second thought, as I mentioned as well, and I think we had a brief considerations on that point as well. That's what we can improve from the public side of the equation. How we can actually match what's happening in the business sector, in the business environment. We discussed about experience and competencies in the supervisors. I think if we on top of that we are actually able to speed up the technology uptake on the supervisor and regulator side. This is something that can enormously facilitate the day-to-day lives of businesses, but also customers. Many of the reporting obligations, for instance, can be digitalized, and this is something I think where we also need to look properly and maybe see if we can enhance and invest a little bit more efforts and funds to that, so that we also create let's say the public side of the equation fits to the 21st century. Thank you.
Thank you. I agree with that. Christian.
Really briefly, I think a lot has been already said, and I broadly agree with a number of the core principles. I think when we look back, for example, European Commission's proposal for crypto assets, the objectives are really the most important ones for us to, so encouraging innovation, ensuring competition on our network, while at the same time allowing for very strong consumer protections and ensuring that the system is really targeted at guaranteeing financial stability. I think at the same time, when you look at the same proposal, there's a number of provisions in there that we don't think will advance the Europeans' policy goals and actually eventually stifle innovation and entrepreneurial activity in the region. It's tempting probably to take frameworks that have worked in the past, like e-money, and apply them to new concept. But even issues like the direct claim or the redemption rights around arts, these are all things that will work slightly differently on a blockchain. And in fact, there's a way to really provide consumers with equivalent protections under novel business models and approaches. And so if there was one thing that I think would be really important for the European Union to get right, is the right degree of flexibility. I think this really speaks to the role that path dependency can have when an industry and a space is nascent. Setting the boundaries in the wrong way can really stifle experiments that eventually could deliver tremendous consumer value. So that's kind of our position, and we look forward to working with European regulators and policymakers and really understanding what is the best way to design systems at scale.
Okay, Philippe?
I perfectly agree with the previously mentioned topics. I actually, if I would say something now, I would repeat it. So let me simply agree perfectly to what have been said earlier. I think education is key. We need to basically drive education. We need to create trigger points why people should investigate time basically in such new digitization topics. We need to create incentives why they should do so, and so on. And once people understand things like blockchain technology, it also includes data analytics, AI, and so on, then suddenly quite some problems are solving themselves, right? But people first have to understand it.
Thank you. And then lastly, Patrick.
So a theme for 2021, I'd say improving digital and financial literacy to make the financial ecosystem more effective. The appeal of a digital wallet also introduces greater complexity. People need to be educated.
Okay, can I thank you all very much, and I apologize again for the technical problem before, which kept you waiting a few minutes. Really appreciate all your thoughts, and hopefully at the conference next year, the opportunity to sit down in person.